Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. Today, we speak with Rob Moore, General Manager of AcreTrader, and Drew Lipke, Managing Director of Investments. Rob leads the company's operations across farm management and acquisitions, while Drew oversees investment strategy and capital markets. Founded in 2018, AcreTrader is an online platform that gives investors direct access to farmland as an asset class, while also supporting farmers through innovative routes to capital. The company manages the complexities of land ownership, from insurance and accounting to working with farmers and improving soil sustainability, making farmland investment more transparent and accessible. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Drew and Rob, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Absolutely. Pleasure to speak with you, RJ.
Yeah, thanks, RJ.
This is kind of a new area for us, but I'm super excited because it's not an area I know a lot about, and that is investing in land, particularly farmland. So maybe for the benefit of our audience, we can start off with kind of like a basic explanation of AcreTrader, and maybe as part of that, maybe a little bit of history as to how the company got founded.
So AcreTrader is an investment platform that allows investors to fractionally access farmland as an asset class. So to back up a little bit and differentiate this between farmland and farming itself, our focus is on real estate investing. This is ultimately an investment in the land underneath it. The thesis behind farmland investing is very straightforward. We're losing well over 1.5 million acres a year of United States farmland to urbanization. At the same time, we have an expanding population. So at a macro level, you have a shrinking supply and an increasing demand. Historically, that has always involved capital looking to invest in that space, specifically alongside farmers. Farmers have to scale their businesses. They have several set costs associated with operations. They have their labor, they have all their equipment, and then ultimately they're looking to pick up as much land as possible to scale their business. Historically, from the investment side, that has been limited to very, very wealthy individuals and institutions. You need anywhere from $1 to $10 million to invest in a farm. It is a long-term investment, so you're locking up that capital for a very long time. What we've worked to do at AcreTrader is build out a model that allows investors to bring that access point down from $1 million to $15,000. So we allow lots of investors to get together, accredited United States investors get together, and then pool that capital to go out and work alongside a farmer to invest in the land that the farmer will then be farming on top of. And the marriage of that operator looking for unique sources of capital to scale their business and investors looking for access to farmland at a lower price point has been the solution that we've brought to the marketplace.
Mm-hmm.
And I'll say you asked about the founding of AcreTrader and the history. I'll touch on that very quickly. We were founded in 2018 by Carter Malloy. And over the last 7 years now, we've been building this platform of making the awareness of the asset class to investors, and then also awareness with farmers and farm managers, which is our supply source, and kind of building this supply-demand platform that allows this access into farmland. A couple of weeks ago, we actually announced a major event for our company where the AcreTrader platform, the asset management piece, was acquired by Proterra Investment Partners, which is a $3.5 billion alternative asset manager based in Minneapolis. That was previously Black River Asset Management that spun out of Cargill. So they've historically invested in farmland, but not in the United States. Our core focus is on row crop farmland here in the United States. And so that was a very natural fit, and we're very excited about the next leg of growth for our company here.
And maybe just to zoom out and better understand the macro picture here, if we look at farmland in the United States and who owns that farmland, how could you characterize it? Like X number, thousands, tens of thousands of farmers. And I'm sure you're just scratching the surface now of like the farmers that are on your platform or the farmland that's on your platform.
That's right. Yeah, I think broadly speaking, it's a $3.5 trillion asset class. When you look at just cropland acres, there's about 384 million cropland acres in the United States. that all has varying degrees of Class A cropland to highly marginal cropland. But broadly speaking, that is the overall asset base in this country. As Rob mentioned, we lose about 4.8 acres every minute in this country due to development primarily, as well as other factors. And it's majority owned by farmers. The primary owner of farmland is farmers. The primary buyer of farmland is farmers. So it's going to vary by a given market, but generally 70% of farmland buyers are farmers themselves. Where we step in is we provide a tool for farmers to be able to grow and scale their business. And to provide a good example of that, if you're a farmer and you're looking to pull some equity out of your land, maybe it's a family-run operation and you have two siblings who want their equity out, we will do a sale leaseback with farmers that allows them to pull some equity out while still maintaining the operations of that land. If they were to go sell that, the likelihood is that it would be purchased by another farmer. Another good example is if you have an absentee landowner who is selling their farm and you've been operating that farm for 5-10 years, and you don't want to lose that from your operation. Oftentimes farmers will come to us and say, hey, I've got a landlord who is selling. Is this asset, if it fits our due diligence criteria, is this of interest to you? And we'll try to work out purchasing that land and then turning around and leasing that back to the farmer under a long-term lease structure so they don't lose that from their operations.
And to better understand the economics of farmland, I think it's widely known that it's sometimes difficult to operate, a farm. The mass producers or the mass farm operations, those are the ones that are able to actually make it work in terms of margins. So if you take an individual farm and farmer, how do they go through that sale leaseback arrangement? They take some equity out that alleviates maybe some liquidity pressure, but they're still kind of operating under the same margin. Or is there a way that you can also help them improve their operations?
Yeah, so I think it's worth noting it is factual that agriculture has been in a process of scaling over the last several decades. So the number of acres that a farmer in Iowa needs to run a full-time operation is substantially more than it was a generation ago and a generation before that. So there is scale within the marketplace that is occurring. What our model does that's a little bit unique is we're not really focused on maximizing the cash flow. The vast majority of the potential return from farmland investing is from that appreciation of ground because you have this macro where you have a shrinking supply. So to follow up with the example of the sale leaseback, if a farmer comes to the AcreTrader platform and says, hey, I would like to sell some ground and continue to operate on it, and I'm willing to sell it at some discount to market, right? Ultimately, the investor is looking for a favorable entry price. Well, in exchange for that, we're able to offer a discount to market on the leasing side. So ultimately, that makes their financials, but not only provides that liquidity, but now all of a sudden, maybe instead of paying $400 an acre to rent ground that they would externally, they're paying $375 an acre to rent ground. And to be clear, our goal is to be mutually beneficial. I think most good underwriting is a matter of alignment of incentives. And that has been a core principle of our business. We underwrite a single-digit percentage of the deals that we're looking at. And almost all of these are off-market transactions because ultimately what our goal is to find a good buy for the investor. So good opportunity for them to invest. It's long-term. It's largely liquid. It's focused on that appreciation of land value. It does provide consistent cash flow, but the goal is not to maximize the cash flow off the farmer. The goal is to maximize the buy. In exchange for that value to the investor, we need to have the farmer also gaining value off of that transaction, right? Otherwise, you're not going to be mutually beneficial. And ultimately, I think that's a key pillar for our business success is we have to solve a problem also for farmers. So a discount and rent, we also on sale leaseback deals, we routinely provide purchase options to the farmer. So, a farmer may say, we had an example recently in Minnesota where a farmer wanted to sell a piece of property that they owned to be able to take that capital and buy a piece of property that was tangential to their home operation. In farmland, you got to remember some of this ground may only come up for sale once in a generation. And so a farmer, if they can expand their core operation where they live, that economy of scale works for them. They are going to pay for that ground. They're going to buy that ground. To free up the capital to do that, they sold something further out in their operation. They took that capital, bought something next to their home farm, continue to operate on this farm over here, and we provided a set purchase option where when we go to sell that farm, the farmer has the first option to go in and call a buyback on that piece of property. So as their business scales, we want to be a partner that allows them to functionally use this as a financing tool where they can go out, pull liquidity, and then still remain access to not only farm that ground, but then own it in the future as well.
Yeah, the other key piece that I'd add to that is that we only buy investment grade farmland. So it needs to be Class A, Class B ground. This is not marginal ground. If you're buying Class A, Class B ground in core regions across the country, that's going to have the highest profitability per acre.
Mm-hmm. I was scrolling through some of the examples you have up on your website, and your net IRRs are healthy. I mean, I think you're going from like 9 to 30%, which is great. And as I understand it, that return is coming from, maybe it's a mix of, a subsequent sale of that investor's shares, or it's potentially they're getting some dividends or income, so to speak, off of that farm operation. How would you characterize the return? Is it that mix, or is it really predominantly the buying and selling of shares?
Yeah, it's a key piece to understand about the asset class. And so it comes in two forms. One is the appreciation of the farm over time. That is the primary driver of the return profile for farmland as an asset class. And so if you look back historically, farmland is appreciated by 6% on average annually, going back over the last 60 plus years. That's kind of the market level appreciation. And then in addition to that, for row crop farmland, it's usually something like a 2 to 4% cash on cash yield annually from the lease income. And so the return profile on our platform that you'll see is when you invest, you then every year should get something like a 2 to 4% net after all fees, cash on cash yield. And then when the property is sold, you get to realize the appreciation. And so if you think about just market level returns, it's good to think of it as 6% appreciation plus 2 to 4% cash on cash yield. That's kind of the annualized 8 to 10% return is the way to think about market level returns. Now, our ability to generate better returns comes from our ability to buy better. And so we tend to use a significant amount of data that we have, that there's no MLS in farmland. There's a lot of information asymmetry in this market, and that provides us the opportunity to drive value for investors. And so we have to buy better and buy below market. And then when you're holding these high quality investment grade assets over 5 to 10 year hold period, our job is then to, one, manage the asset appropriately to continue to increase value. And then two, identify a motivated buyer. As Rob mentioned earlier, farmland has scarcity. It does not trade hands very often. And so oftentimes when a farm goes for sale, that local farmer or local investor, whoever it may be, knows that this might be the only chance in their lifetime they get to be able to purchase that farm. And so they're typically going to be very motivated to put forth an aggressive offer. And if we can capitalize on that, we can drive better returns than that 8 to 10%.
Do you have cases where the subsequent buyer would be a developer? You're kind of like selling into the urbanization of that land, or you are keeping this land strictly in the hands of other farmers?
So first of all, no, we've never sold into a development situation. I think more importantly, though, this begins at our underwriting. When we're underwriting farms, we are not prospecting, right? We're not looking for opportunities to buy very close to cities. We're actually the opposite. We underwrite exclusively off of farmland value. So when we do our underwriting, there is absolutely no metric that is the chances it turns into a neighborhood. We are underwriting looking at this as pure farmland. And as Drew mentioned, we're focused on higher quality farm ground. We consider investment grade farm ground from our end. That by nature is going to be in core farmland regions. If you look at our portfolio, it's largely focused around a couple of core regions: the Upper Corn Belt, the Mississippi Delta, Carolina Coastal Plains, the Pacific Northwest, and then some in California. We're buying areas where this is mostly going to be farmland. You're going to see nothing but farms on farms on farms. And it's not that we wouldn't buy something closer to an urbanized area. It's that we would provide no additional value to that. So the odds of us being competitive on an offer are extremely low. That is not a part of our core thesis at all.
Mm-hmm. If I were to go on now and get access to all the opportunities, how many would there be? I mean, is it like hundreds of different farms I could potentially own a piece of?
No, so we typically for us, we're going to have anywhere from 1 to 3 offerings on the platform at a time. We run a democratic process. So when we have an offering for the website, we put it up typically 3 to 5 days before it opens for subscription. So we put up a full PPM, all of the information and story of the farm, pictures and or videos, and then a full financial model. It's very important. Like, financial transparency is key to our mission as a business. So you can always download a full financial model in Excel, see all of our assumptions, see what that financial cash flow or anticipated cash flow looks like. Then we open it for subscription at 1 p.m. on a weekday. Our minimum is a $15,000 investment in most instances. Investors can invest any amount above that in $1,000 increments. We have no idea what's going to happen before we launch an offering. I don't know if we will have a cap table of 50 people or 200. So ultimately, there's a democratizing of access to the asset class that we're pushing on that limits us in the number of deals that we want available at a time. Feasibly, you're not going to see 100 offerings at a time on the platform, and some of them move very quickly. So we had an offering up this week that was up for less than 24 hours. Sometimes an offering will come up and will be available for a couple of weeks. In general, expect 1 to 3 offerings at a time from us, and we try to average something like 2 to 5 a month.
I'd also add that I think anybody can buy a farm. Anybody can say the highest number. We're very strict. We only buy in certain areas. We only buy certain quality of farms, and entry price is everything. We're very focused on making sure that we're coming in below market on a fully loaded basis for investors, because that is how we drive returns.
And can you give us a sense for like the volume that you've done through the platform?
We have roughly 145 farms under management, a little over 44,000 acres across the country. And that represents approximately $300 million in asset value today. We've also had those 15 exits. That was approximately $25 million that we returned back to investors through those exits.
You mentioned earlier, I mean, this was a significant transaction that your company just went through with your private equity investor, and they know the asset class almost as good as anyone. Can you tell us a little bit about that partnership and maybe how it came to be and what you think it creates for you going forward?
We've had a lot of inbound interest in our company over the years, and AcreTrader Inc., the parent company that we sold out of, and we're now part of Proterra. The remaining company is acres.com. You can go see that. That is a software company that was effectively a data business through a mapping interface. I'd definitely recommend you go explore that. But we had inbound interest on the asset management side, and so it was our duty to go out and explore that. And we did talk to a number of parties. We know a lot of the people in this industry that we've built these relationships with over the last 7 years now. Proterra was one of those. And Proterra has the South American farmland investing, the Australian farmland investing. They hadn't invested in the United States because of their spin out of Cargill did not allow them to, and that's since sunset. And they quickly jumped at the opportunity. They dug through our due diligence, looked through every single farm, and their main criteria for us was, okay, these guys know what they're doing. These guys know how to buy farms. This is a good team. They've been wanting to get into U.S. farmland, and it was just a natural fit. The timing couldn't have been better. We then met with Rich and the team up at Proterra in Minneapolis, and from a cultural standpoint, it's a fantastic fit, and they are really excited about accelerating the growth of our business. We provide access to accredited investors today. Most investors have somebody else invest for them. There is a large wealth management channel that does not have good access to the farmland market, and Proterra specializes in providing vehicles. Today, they provide, private credit, growth equity, those vehicles to that RIA and institutional channel. And now we can accelerate farmland to that channel as well.
Excellent. And just to better understand that distinction you made with AcreTrader, can you further explain that? So there was a portion, you had technology that was operating AcreTrader that is separate from what Proterra acquired?
Yeah. So underneath what was previously our parent company, there were actually 2 functionally independent businesses by this point. But acres.com and Acres, the data platform, was originally developed out of AcreTrader. So we had a need within our space. As Drew mentioned earlier, there is no MLS in farmland. Finding access to good data, land data across the country is incredibly difficult. That's the case for both agriculture as well as aggregates and several other industries that work in rural spaces. We had, I think, 5 or 6 different data subscriptions when I started here at AcreTrader almost 5 years ago now, and none of them were meeting our needs. And so we had a very high-powered development team and decided we were going to build our own. Over the course of the next 2 years or so, this would be between 2021 and 2023, we realized that the market for that product was much larger than our organization and much larger than agriculture. And so ultimately, we divided into 2 separate groups within our parent company. We had acres.com and acretrader.com. We function as an investment platform focused on farmland, and Acres is a data platform focused on land data and land intelligence. And to be blunt, we are a client now of Acres and will be. We use their data. It is absolutely best in class. There is no competition within the data space for what we're looking to do. And it gives us an edge. Access to that data is a meaningful part of our underwriting process. And we have the privilege to know them extremely well because, again, their business functionally was a part of ours for a very long time. So they're functionally serving two different markets. We are one of the markets which Acres is then targeting, but ultimately that's a very fast growing and healthy business moving into several other spaces within the land intelligence space.
Excellent. We're coming up on time. Typically, I end with two final questions, but given that there's two of you, we're just going to end with one question and we'll have each of you answer it. And this veers towards the personal, but maybe we'll start with you, Drew. Can you tell us about the person who has influenced you the most?
Ooh, person that's influenced me the most. Gosh, I would have to say my dad. The way that he approaches life and the way that he interacts with people and his just genuine sincerity. I used to joke that I couldn't go anywhere in public with my dad because he would stop and talk to everyone and we'd never get where we're trying to go. So I've always looked up to him tremendously. So that'd be my answer there.
Excellent. Rob?
Yeah, I mean, to not be duplicative of actually means my mom, obviously the first thing you think about is your parents always when you think about influence. For me, one of the things that I've learned professionally over the last decade is people are always going to trump product, and understanding both internally as a manager as well as externally working with partners, specifically in agriculture, understanding the farmer and understanding the client and understanding aligning incentives. My mom was a preschool teacher for most of my life, and the focus on people and personal development and understanding what angle everyone comes at has influenced me immensely, obviously as a human, but also as a professional. I think you need to understand the people that you're working with. We work in a people-based business. This isn't quant trading, right? This is a human endeavor. We are talking about food that grows out of the ground, that is a hard asset underneath that. And for me personally, yeah, I think about my mom constantly. She's actually in town right now because I had a busy week helping take care of my children who are obsessed with her because she is so focused on who they are as people. And that's something she applies to everybody she's ever been around and very much something I look to mirror in my life.
Wonderful. Well, Drew and Rob, want to thank you again for taking the time. It's been a great conversation.
RJ,
thanks, RJ.